Good morning. Welcome to StockMarketFunding.com. We are doing a trade on First Solar that we recorded late last night and after hours, and we had bought the 145 calls prior to the earnings session. And basically, this is the momentum of First Solar up $21 here. The put contract is that our style of doing things, this is a 140 put, and they closed at 1540. When this premium gets down to 220, I'm going to buy that 140 put if I can, because I'm buying that wholesale. Then I'm going to come back over here when I pull back. We already pulled back we sold these at 850. They pulled back. Another one of our new students there, Syed, bought at 610, sold at 810, bought again at 6, sold at 850. And basically what we're trying to do is get on the other side of this deflated premium of the 140, and then when First Solar wants to pull back, or which one ever side comes first. But we are going to buy the pullback in here again and trade it, but we want to buy that deflated premium. Closed at 1540. Premium got down to 283. We had bids out at 220. We're going to buy this contract again, and on an intraday level, the short sellers that were short First Solar going into yesterday's earnings are having a house of pain. That means stock pulls back, it bounces. Stock pulls back, it bounces. And what we're going to do is we're still buying this 145 call that we already sold. Made a lot of money on it. Made a lot of money on this call. Go to StockMarketFunding.com. Look at the trade last night that we did. And we even bought the shares last night, sold the shares. Basically, I'm going to buy this pullback, and I'm going to make another run. I don't know when I'm going to be able to get this side, other than I know that $2.20 is where I need to be. 283 was the low. So as we move throughout the day, is that we're going to position ourselves, the 145 call, which is up and out of the money, or it's in the money, I'm sorry. Below, out of the money, below the market is the 140 put. That way, we get this wholesale again for what it's worth after selling it. And somewhere in here, we're going to get that 140 put below the market. And we're even going to go as far as doing this. The 150 put hit a low of 270 and already bounced. Look at that. And so we're going to watch that 150, I'm sorry, the 150 call. We're going to buy the 150 call as well. If we could get this somewhere right around $2 and let's say 50 pennies. So we're going to trade lots of ways around there, but we're going to put this 140 put in the middle of all of these trades at the wholesale price as well. And the volatility trade is you get this at 220. When it pulls back, it goes up, you sell. And you keep trading this one and you leave the other two alone. Because what happens is to trade volatility, you can trade volatility, but you can't be an expert in volatility. When it comes to options, you want to always get the deflated price against the original price on the second round of trading. I'm not going to go into it any more than that, but you can always come and get involved in our school and learn how to be a pro at doing it. That's your choice.